Short of buying gold and silver, Robert, and tangibles, assets, if you look at the wealthy own assets. It's not massive bank accounts as much as it is assets that feed you and liabilities that eat you. I guess what can people do? They can get out of variable rate debt first and foremost. As rates rise, that variable rate debt increases. You can buy silver as often as you can, even if it's just a few ounces at a time.
Andy Schectman, the president and owner of Miles Franklin Precious Metals, recently appeared on the Rich Dad channel, where he discussed the importance of owning tangible assets like gold, silver, and real estate, rather than relying solely on bank accounts. According to Andy, gold and silver are tangible assets that have proven to be reliable stores of value over time. He believes that owning physical gold and silver can act as a safeguard against inflation, currency devaluation, and economic uncertainty. During the interview, Andy suggested that individuals should consider adding gold and silver to their investment portfolios as a way to diversify their holdings. He recommended allocating a portion of one's assets towards these metals to reduce risk and potentially increase returns. Compared to Andy's perspective, Robert Kiyosaki, founder of the Rich Dad Company, shares a similar viewpoint on the value of gold and silver. Kiyosaki has long been warning about the dangers of inflation and believes that the current economic system is unsustainable. He believes that excessive money printing by the Federal Reserve is causing the value of the dollar to decline, making it harder for people to save and invest their money. In Kiyosaki's opinion, gold and silver are the only assets that will retain their value in an inflationary environment. He sees them as the best means to safeguard wealth from potential economic collapse. Similar to Andy's recommendation, Kiyosaki emphasizes the importance of diversification by suggesting individuals consider allocating a portion of their assets to gold and silver. Now let's watch excerpts from Andy Schectman's interview with the Rich Dad channel. Be sure to watch the entire video and consider subscribing to our channel. Don't forget to enable post notifications to stay updated on our latest uploads. Thank you and enjoy the video.
If most people don't see what's coming, they can't get out of the way of it. If you're listening to this, if you have the ability to own some precious metals, do so, because as Robert said, it is an asset that is not simultaneously someone else's liability. The concept of counterparty risk is something that's going to become more and more and more entrenched in people's psyche as we see more and more banks fail, and what it means to be involved in an asset or in an instrument that contains counterparty risk. Because if a counterparty fails, what does that mean to you and the asset that you hold that is valued upon the counterparty's ability to perform? Not so good. So removal of counterparty risk, removal of variable rate debt, removal from the system, best you can, is where you start. And depending upon your means, well, then you have different ways of achieving that. But I think removal of counterparty risk being the primary objective in all of this, because you know what? It's one thing for me to say the stock market's overvalued, or the real estate market's overvalued, or the bond market is overvalued and risky, and they all are. It's another thing to say that the money that you're holding for your business, for your family, in your 529 plan, for your kids' education, that it's all in a very precarious position inside what amounts to almost 5,000 banks that have been the backbone of the U.S. economy for a very long time. I don't know that it'll be because they print too much money. I think that will certainly have a profound effect on the value of the dollar. But as we've talked about before, this growing cohesion around the world of countries joining together against the Western hegemony. If they dump dollars, if OPEC and Saudi Arabia, which if you look at the things that are happening, Saudi Arabia, all of the things that they've done, including just joining the Shanghai Cooperation Organization, meaning they're now being protected by China as well, not just Russia. And if you look, they've joined the BRICS, they've joined the Belt Road. They told the folks at Davos they're open to taking other currencies. And as we've talked about in podcasts 2, 3, and 4, what makes the dollar the world reserve amongst many other things, the biggest thing is the fact that Saudi Arabia and OPEC price oil in dollars. If that ends, and it looks like it's going to based upon all of the moves and pieces that are being put into place, bang, like that, there's your tsunami, there's your 30-foot tidal wave of dollars that hit our shore. And when that happens, that becomes hyperinflation. Now, here's the piece that people don't put two and two together. When you have massive, massive, massive inflation, you must allow the market to revalue interest rates commensurate with the inflation. You can't have 5% interest rates with 25% inflation, or you have Weimar Republic, where your currency is losing 5 times its value every year. Instead, interest rates would have to spike to the moon to compensate for the loss of purchasing power that inflation creates, hyperinflation. And when that happens, that's when you see wheelbarrows worth of dollars being used to buy a McDonald's hamburger, and you go in to see if there are any hamburgers, and you come out and the cash is laying on the ground and the wheelbarrow was stolen. That's exactly how it would happen if the world dumps dollars because they don't need to own it, realizing that these banks in their hands hold the majority of all the small businesses in this country. It's a very frightening thing if you own a small business and have your money in what amounts to any bank other than a commercial bank. And really, a lot of people do, because these are the banks, and we've talked about this before. You talk about the small banks that are in your neighborhood, real close to the places you frequent. Well, the places you frequent, they go in and they have relationships with these small banks. These small banks make loans to small businessmen and women based less upon balance sheet and business plan and more upon relationships. In many cases, like you said, you went to the bar, your local Cheers bar. A lot of times people go to the local Cheers bar on a Friday night and sit down with their banker. Hey, how you doing? I coach your kid in T-ball, and we've known each other forever and ever. That's what these small banks really are all about, relationships, and how that has helped foster the small businesses in this country. Very scary point. I'm glad you brought that up, because really it's probably one of the biggest issues with the small regional banks running into trouble.
During the interview, Andy also highlighted the potential dangers within the banking system. He pointed out that 722 banks were technically insolvent at the end of 2022, indicating that they had more liabilities than assets. This alarming situation was a result of the strain caused by rising interest rates on their financial health. Moreover, Andy also believes that central banks are currently purchasing large quantities of gold. He explains that this behavior can be seen as a form of front-running, where individuals or institutions with access to valuable information and substantial resources make strategic moves before expected events occur. He argues that the insiders selling or central banks buying gold ahead of time suggests their awareness of upcoming events that are not yet apparent to the general public. Let's get back to the interview.
I make that same analogy to the central banks buying record gold for the last 18 months more than any time in history. Why? What do they see coming? They're front running as well. The people who have the most money.
Explain what front running means. It's one of my favorites.
It's the people who have the most money are also closest to the information. So it's like a football game. In the huddle, you know where the play is, so you can front run the route. The defense has to react. They are front running an outcome that they know is inevitable. And I think that's really the scariest thing of all, is that if you realize that these insiders were selling, or that the central banks are buying gold, the question is why? Why are they doing something early when it doesn't really make sense to the masses? Because they know the information and they're able to get in front of what's coming before it becomes obvious to everybody else. In fact, at the end of 2022, there was a report that just came out by the Federal Reserve who said that 722 banks were technically insolvent at the end of 2022. And that means that they had at least 50% of their capital was underwater. And these are called unrealized losses, whereby, of course, the rising interest rates have created significant strain on this. But if they were to get a run on the deposits, where the depositors request redemption, the only thing that they would have been able to do at this point, or any of these 722 banks would be able to do, would be to sell those assets that are underwater. And that's why we saw in 36 hours it put Silicon Valley Bank, just like that, out of business. So there's a lot of these banks that are underwater technically. So what do you do?
Gold and silver are tangible assets that have proven to be reliable stores of value over time. They are not subject to the same volatility as stocks and bonds, and they can provide a hedge against inflation and currency devaluation. As the global economy becomes more uncertain, demand for gold and silver is likely to increase. This could lead to higher prices for these precious metals in the future. So, what are your thoughts on the future prospects of gold and silver as reliable stores of value? Please leave your comments and observations in the comments section below. Also, be sure to like this video, subscribe to the channel, and enable notifications to stay up to date on our latest videos on silver, gold, and copper. Thanks for watching.